Good morning, all. What I'm going to do here today is essentially give you a lay of the land when it comes to cloud spending and how we think it's going to grow over time and what it means for consolidation, because we have seen this movie play out time and again. So let me give you some background, actually a little bit about BI. We are a research group within Bloomberg covering companies and industry, and we try to cover it holistically, the equity side of things, the credit side of things, the litigation aspect, and the ESG aspect. So here is the agenda that I have. I'm going to talk about the cloud spending first relative to the overall IT spending. Then I'm going to jump into the software segments, what kind of adoption we are seeing for the different cloud segments, and then talk about the different deal phases that we think are going to play out in the cloud, followed by the vendor positionings for both the on-premise and the pure-play cloud vendors, and finally end with some cloud metrics, which we think will drive the deal flow. So when you think about cloud spending, and this data is coming from IDC, essentially total IT spending is about $2.3 trillion. Cloud is close to $400 billion, which is approximately 20%. And when I talk about the cloud spending here, I'm including everything. The public cloud, which is Amazon, Google, Microsoft on the IaaS side, and then Salesforce, Workday, ServiceNow on the SaaS side. And I'm also including the hardware spending on the cloud and the hybrid cloud, as well as the overall services spending. So the total pie for cloud is close to $400 billion, and that is about 20%. What we think is going to drive it to 30% over the next 5 years is because cloud is entrenched in every part of the business now, and every business feels comfortable investing in cloud. So we think it's going to grow approximately low teens over the next few years, and contrast that with total IT spending. So total IT spending, our view is going to be low single digits, and that's why you see that shift from 20 to 30%. Another way to show it is looking at this slide, comparing it to the online music and smartphone market. So obviously, the disruption started much earlier there. And you see the trend has played out in the last 15 years for online music, and same for the smartphone market, where 80% of the market is being captured by the disruptors now. Same thing is happening with cloud. Cloud, we feel, is at inflection when it comes to workloads. So the 20% here indicates the workloads. 20% of the workloads have already migrated. And we don't think it's going to be just one way up or it's going to accelerate. There will be a long tail. But for now, every vertical is kind of at ease with moving to the cloud. And especially when it comes to financials and healthcare, which were initially skeptical about moving workloads to cloud, they are getting comfortable more and more with public cloud. So you're going to see some acceleration now, and then there will be a long tail, the same thing that transpired with the mainframe cycle. Not everyone got out of mainframe because there are certain critical systems that are still being run on mainframes. Now, I wanted to dig deeper into the public cloud, because when we think about cloud, the innovation really started with the SaaS companies. You had the Salesforce and the ServiceNows of the world come about. They started off with their own data centers, and then now we are seeing more and more of the public cloud IaaS side, which is the infrastructure as a service, and that's where Amazon, Microsoft, and Google have done so well. And that part is a consolidated market. So the SaaS part is still fragmented. There are a lot of vendors that have focused on individual segments. I mentioned about Salesforce, and we are going to get into the vendor positionings as well. But the IaaS part is somewhat consolidated. And the PaaS part, the jury is not out yet whether PaaS belongs to iOS or it belongs to the SaaS, because every vendor, be it Salesforce, is trying to get into PaaS with MuleSoft acquisition, and they're trying to build more services to integrate the clouds. And same thing with the IaaS guys, Amazons and Microsofts are trying to play on the DevOps side. They're trying to layer in more services to help organizations integrate workloads with moving up the stack. So overall, public cloud is about half of the cloud market. So I mentioned 400 billion. Public cloud is about 200 billion. And within public cloud, you will see SaaS is about 50%, followed by IaaS at 30%, and the remainder being PaaS. And the overall cloud market is going to grow at healthy 22% over the next few years. So clearly, I think it's an established market now, and public cloud is the most kind of where growth is. So let me jump into the software segments. Not all the software segments have seen rapid cloud adoption. And I mentioned about Salesforce and Workday and ServiceNow. The most, I would say, companies are comfortable with moving their CRM systems or their HR systems to the public cloud simply because they were sort of non-critical. When you think about ERP, it's integrated so deeply, it's hard to just shut it off and move to a new system. So that's why, and I have a few numbers to share. So on the CRM side, you can see that more than 60% of the market has already moved to the cloud, and that's where you've seen category leaders like Salesforce.com. Same thing on the human capital management side. Over 70% of the market has already moved to cloud. That's where you see a category leader like Workday. And just to contrast this with ERP, you see it's still 77% is still on-premise, and the on-premise vendors like SAP and Oracle are still the leaders. Same thing with supply chain management. Bulk of it is on-premise. And then I didn't include databases because even databases, bulk of them are on-premise. But security and big data analytics are two categories where we think once the workload moves to the cloud, you're going to see some rapid acceleration in terms of movement to the cloud. And that's what we are seeing, that now that there is an inflection in terms of moving the workloads, we think this thing is going to shift dramatically to the cloud side. And part of it has to do with just moving the workloads. The other part is the multi-cloud aspect, that organizations don't want to be logged in. They want to use multiple clouds, and that's where security and big data analytics will play a key role, and they have to be delivered on the cloud. So now comes the deal phases. And what I thought would be interesting is to compare and contrast how the different deal phases are going to play out and what we have seen so far. So we are already in phase 2 of cloud consolidation. And what I mean by that is right now, if you look at this current phase, these are the major deals that have happened. Salesforce buying Tableau was the latest one. They already bought MuleSoft. And most of their acquisitions, if you look at them right now, are geared more towards building that PaaS component. In the phase 1, which we are going to go over in the next slide, they bought more of the SaaS companies. So they wanted to add functionality, expand their SaaS aspect. In this phase, they're trying to focus on the integration and analytics. So MuleSoft was all about integrating different clouds. Tableau is all about analytics. And when you look at a company like VMware buying Carbon Black and Pivotal, again, they're trying to layer in security and containers. We are going to touch on containers as well later on. But suffice to say that even when you look at IBM, they bought Red Hat. Red Hat is a clear play on how you integrate multiple clouds. And so they obviously were lagging behind when it comes to the SaaS side of things, but they think they can make a standalone PaaS play, which I'm going to cover in the vendor positionings, what I think about independent PaaS vendors. And finally, again, Adobe is another category leader. It has been buying a bunch of SaaS companies. So every vendor has a different strategy, but the large ones want to play at least 2 segments. And Microsoft is the only one that's playing all 3 segments. So the first phase, again, this was much longer. And this is where you saw most of the acquisitions were SaaS, application-based. There was nothing on the IaaS or PaaS side. And I already mentioned that IaaS, infrastructure as a service, is somewhat consolidated. And my long-term view on software in general is there is space for only 4 or 5 vendors on the infrastructure side and 4 or 5 vendors on the application side. That's what we have seen in previous cycles. Right now, there is too much fragmentation on the SaaS side. Infrastructure side, like I said, is somewhat consolidated. You have 4 or 5 big infrastructure as a service vendors, and that's where I see more consolidation on the SaaS side. But that we have already witnessed one phase of it, and you can see how Salesforce built their SaaS applications. They bought a few companies, over time. Even Microsoft, they bought LinkedIn. It was a SaaS acquisition, really add capabilities for their Office 365, and that's what they got it right, in terms of migrating Office 365 and then buying LinkedIn and, then adding their IaaS services. And this is, I thought it would be interesting to see how this played out in the on-premise cycle. So for on-premise systems, you saw a bunch of acquisitions by category leaders like SAP, like Oracle, where SAP bought Business Objects, which was an analytics company. They bought Sybase, which was another database sort of analytics. IBM bought Cognos. So most of them were analytics, and then there are a few security acquisitions as well. Oracle bought PeopleSoft, which again was more on the HR side. So the reason I have this is at the end of that cycle, you had 5 or 6, category leaders remaining on the application side, and we think the same thing is going to happen over here with cloud. So going into the vendor positionings, Microsoft, we think, kind of plays across all the 3 segments of the cloud, and they are in a unique position simply because of both their organic development as well as the 2 acquisitions they have made, LinkedIn and GitHub. GitHub was more targeted on the PaaS side of things because they wanted to play that DevOps market, but LinkedIn was really to enhance their CRM application, and it did help kind of give them credibility on the infrastructure side because Azure has taken off in the last 2 to 3 years, and companies can see how well Microsoft has done with migrating their Office 365 to the cloud, and then you layer in LinkedIn and GitHub. That has definitely helped them. Salesforce, again, they really pioneered the SaaS side of things, and they've done well since, building more functionality around their SaaS side, and then latest 2 acquisitions are really focused on that PaaS market, cloud integration and analytics, and we think they are very well positioned over there. Oracle, again, if you look at Oracle's acquisitions, most of them have focused on the application side. They bought a bunch of companies in the first phase, Taleo, Eloqua. Everything was pretty small, relatively, compared to the acquisitions we have seen in this phase. But most of them were geared towards applications. They haven't done any deals on the database side, which is the more than 50% of their business. And we think there is scope for database consolidation as well. Which, again, the thing about these vendors, and I won't write anybody off right now, is their balance sheet. They have such strong balance sheet and cash positions that at the end of the day, when you see a deceleration in growth for a lot of the billion-dollar companies, that's where you will see a catalyst for more consolidation. So we're going to get into that as well in a bit. SAP, again, focused mostly on applications, Qualtrics, Calidus. All of them are mostly applications, and they have a pretty strong footprint on the ERP side. So they continue to build cloud assets. It's just they haven't done a very good job of integrating them. IBM and VMware, I thought it would be interesting to cover them because IBM really hasn't done much on the application side. They are trying to pivot themselves as a pure play PaaS player, really trying to capitalize on the multi-cloud trend where all companies want to distribute their workloads across clouds and not get tied in. And I don't think it's going to work out, because, or at least they're going to have a hard time convincing companies that, this is the right strategy. Again, they're pitching themselves as an agnostic vendor, but at the end of the day, software play or companies try to build their ecosystem, and platforms always win. So they're going to have a challenge, just convincing companies to use their PaaS layer. And then VMware, we think they're doing well, at least in terms of transitioning, their virtualization capabilities onto cloud, using a container-based infrastructure. Container is obviously a new trend where every workload is being deployed on containers, and we think the recent acquisitions kind of take them in that direction. Again, it's an execution story, and it remains to be seen if they can also kind of deliver as a pure play PaaS company, because VMware also doesn't have the IaaS component. It doesn't have the SaaS component. Finally, I wanted to go over some of the cloud metrics and the companies. So what you're going to see here on this slide is there are a lot of companies that were born on the cloud that's focused on niche software segments. And really, they've done very well in terms of their growth rates and how they're positioned. But our view is a lot of these companies are going to see a deceleration in their top line once they cross that $1 billion mark. And the reason I say that is if you look at the number of software companies with over $5 billion in revenue, it's, I think, close to 10 globally. So there, at the end of the day, I mean, even though you see a lot of new players emerge, but in terms of carrying it forward and really building that platform, there are only 10 to 12 software companies with over $5 billion in revenue. And that's where we think a lot of these companies that are sort of niche, single product, you're going to see some deceleration in growth, and that's where they become takeover targets. So there are a lot of names. I'm not going to go through all of them, but they run the gamut from security to applications to infrastructure and analytics. And just to kind of drive home the point, so I thought, ARR is a metric, annual recurring revenue is a metric that pretty much all the cloud companies are measured upon. And you see the difference between a category leader like ServiceNow and the smaller companies. I mean, again, all these companies, Zoom, Atlassian, Smartsheet, they're doing well. But when it comes to the annual recurring revenue per customer, the category leaders stand out. You're going to see the same with Salesforce.com. You're going to see the same with Workday. Because they focus on enterprises and because they are the leaders in that space, their annual recurring revenue are much higher. And that just positions them much better compared to the smaller guys. And finally, I wanted to hone in on this point about just cloud software being much better than some of the other disruptors. So compare where the recurring nature of cloud revenue is kind of so much better in terms of long-term value compared to the internet guys like Uber, Lyft, Grubhub, because once you get a customer on the cloud, there is stickiness, and you can keep upselling more products, and that's where there is long-term value. Compared to that, when you look at internet companies, they spend so much more on customer acquisition costs, especially the gig economy companies. And so from that perspective, cloud companies tend to garner a higher multiple, and that's what we saw in the first slide in the cloud metrics. So finally, my takeaways are we are in an environment where IT spending is slowing. So this is the first catalyst. Once the IT spending, I think in the last 5 years, we were in an environment where IT spending was growing mid-single digits. That's very healthy. I think it's decelerating based on what we hear from the companies we follow. There is definitely a downturn coming when it comes to IT spending. That's catalyst number one. Second is size matters when it comes to cloud, and we have seen that with the infrastructure side of things. Amazon, Microsoft, and Google really dominate. And I didn't even talk about Amazon and Google because I don't think they are like pure play software companies. They have so much other things going on. So I focused my presentation on just the software guys. But size matters, and that's where platform companies will always win. Then the second part is there is a long runway in this market. Cloud market is at an inflection. There are just 20% of the workloads that are migrated. And even though there will be a long tail for the last 20%, but we think there will be an acceleration when it comes to workload migration, given the development we have seen with containers and some of the other new technology that has come about, Kubernetes being another one. And then from a CIO perspective, I mean, for you guys, you don't want to deal with multiple vendors. You want simplicity and you want reliability, and that's always been, the mantra when it comes to running IT. And that's another kind of catalyst for driving consolidation, especially on the fragmented SaaS side of things. And interoperability, we think the vendors clearly see their customers asking that cloud should be able to share data. That's why both the SaaS and the IaaS companies are focusing on the interoperability aspect, and we think that definitely will be a big priority for everybody. And finally, cloud transactions won't be cheap. You will see companies paying up a little bit, although multiples will come down, as growth decelerates. So we think all the large vendors who have the balance sheet to pursue these kind of cloud deals are waiting for the right time when the multiples come down. Some of the companies are trading at over 20 times, 25 times sales. I mean, imagine layering a 30% premium on top of that. So we think even though cloud premium will be higher than, for example, the gig economy, but multiples have to come down for consolidation to play out. That's all I had, and unless there are any questions, I'll be around, but that's what I wanted to cover. Thank you.